Welcome to the July 2025 Real Estate Market Update.
We're here to break down the latest report for Sarasota and Manatee Counties.
I'll cover Sarasota, Judy has Manatee, and we'll also compare our local trends to the national picture. And we'll take a look at how the mortgage rates are doing because we have some breaking news from the annual economic conference in Jackson, Wyoming. Don't go away. And remember to like and subscribe so you get the latest. Welcome back, everyone. The July 2025 real estate report is out, and it's a fascinating look at how our local markets are moving toward a more balanced state. Judy, I know you have the numbers for Manatee, but let's start with my home turf, Sarasota County.
Sounds good to me.
Well, the big story for Sarasota this month is our single family homes. Sales surged 12.6% year over year, which is a major positive exception to the overall cooling trend. The median price of $470,000 is steady from last year, but it's up from June, showing great stability. Inventory's been trending down since May, bringing the supply to a more balanced 5.6 months, and that's a great sign that buyers and sellers are finding their footing. Homes are still taking longer to sell, 105 days. It's a signal of a shift in the market power to the buyer.
That's a really positive outlook for single-family homes in your area, Susan. Sales were down 9% year over year in Manatee County, but the real highlight is the price. Median price of $489,900, while down slightly year over year, has rebounded nicely from a dip in June. That median sales price is showing a very encouraging trend, though it's still down about 1.8% from July of last year. Our inventory is at a 4.8 month supply, which shows sellers still have a little bit of leverage. And a unique trend we have here is our median time to sale is actually showing a slight decrease to 102 days.
That's interesting, Judy. It seems the stability in single family homes is a theme for both of us. But where we see a big difference is in the condo and townhome market, which has been apparent for the last 6 months. Closed sales were down 16.1% year over year for townhomes and condos, and the median sale price saw a double-digit decline of 17.8% to $300,000. And in June, the median price was $371,750. That's a 19% decrease. Inventory is at a 7.5 month supply, but the fact that it has been decreasing since March is a good sign of stabilization. Buyers definitely have more leverage and negotiating power in our condo market right now. Expect this segment to continue to be buyer friendly for the foreseeable future as it adjusts to a more normalized supply.
Yep, we're also seeing a cooling in our condo and townhome sales in Manatee County. Sales were down 10.7% year over year, but the median price drop was a much smaller 2.7% to $320,000. However, it was a 2% increase from the prior month of $312,900, showing more stability compared to Sarasota. Inventory levels are higher at 7.0 month supply, but like Sarasota, our numbers have been decreasing month to month since April. We see that buyers have an advantage in this market, but with year over year price drop being much smaller, it suggests our condo market is holding a bit steadier than Sarasota County. While buyers have more options, the smaller price decline and slowing inventory growth suggest that this segment is adjusting in a more controlled way. This could mean more stable pricing for buyers and sellers moving forward.
So, to sum it all up, the main takeaway seems to be that after a period of sharp inventory growth, the market's finding a healthier balance.
Absolutely. The stabilization in inventory and month-to-month trends are key. It points to a more stable pricing environment for the second half of the year. Single-family homes are clearly the steady anchor, with both of our counties seeing positive signs of stability or recovery.
I agree. While homes are taking longer to sell and buyers have more leverage with negotiations, the slowdown in inventory growth is a fantastic sign of a healthier market ahead. And with those changes, it's more important than ever to work with an expert to navigate all of these shifts.
You've got it. It's a changing market, but it's an exciting one. So that's the real estate story for our area. Now let's look at how our local market stacks up against the national numbers, which NAR, the National Association of Realtors, just released. It's interesting because we're seeing some of the same trends, but our market is performing better in some key areas. For closed sales, the existing home sales rose 2% month over month nationally and 0.8% year over year. NAR's report for the South region showed a 2.2% increase in sales year over year. Sarasota County, in our area in particular, outperformed the national average with a massive 12.6% year over year increase in single-family home sales. Manatee County's 9% decrease was against the national trend, but it's important to remember that a local market had different dynamics last year. One of those being the hurricane. Our median sales price nationally for single-family homes was up just 0.3% year over year to $428,500. For the South region as a whole, prices were down 0.6% year over year. Sarasota's single-family median price of $470,000 remained flat year over year, but is well above the national median. Manatee County's single-family median price of $489,900 is also significantly higher than the national median, despite a small year-over-year decrease. Our local prices are holding their value much better than the broader southern region.
Total housing inventory nationally was up 15.7% year over year, reaching a 4.6 month supply. Now, NAR considers a five to 6 month supply a balanced market. We all know that. Both Sarasota and Manatee counties are nearing the balanced market mark. Sarasota's at 5.6 months and Manatee's at 4.8 months. The key similarity here is the trend. Like the national market, our local inventory growth is also slowing and has begun to trend downward month over month, which supports more stable pricing for the rest of the year. The median time on the market for homes nationwide was 28 days, a significant increase from 24 days last year, and significantly different from ours, but we have a different market recovery thing going on here. Our local time to sale is considerably longer. This is a key difference and a major indicator of increased buyer leverage in our specific market. So overall, the national report confirms that what we're seeing locally, the market is rebalancing. The inventory's up, homes are taking longer to sell, and this gives buyers more power. However, our local market shows distinct strength. While the national median price is essentially flat and the South as a region is seeing a slight decline, Sarasota and Manatee's prices remain strong and are well above the national average. This shows that despite longer time on the market, demand for our area remains incredibly resilient, especially in the single-family home segment. Well, let's talk mortgage rates.
Yep, a huge factor in both our local and the national numbers is the mortgage rates.
The national report from NAR confirmed that the slight easing of rates in July helped inch sales up across the country. Rates were hovering in the mid to high six range, which is still a major barrier for many buyers, especially compared to the low rates of a few years ago, which were really kind of manufactured because of the pandemic.
Exactly. So that's exactly why we're seeing more cash buyers too. We had almost 38% cash buyers in Sarasota County and 30% in Manatee County for the single family homes. And that's why homes are taking longer to sell. The buyers are sensitive to the cost of borrowing.
Absolutely. The forecast for the rest of 2025 is that the rates will likely remain in this general range. We aren't expecting a big drop that would flood the market with new buyers, which means the current trend of stabilization should continue. Buyers have more negotiating power and choices, but they're still facing affordability challenges. However, breaking news today from Jerome Powell, the chair of the Federal Reserve, he sent his strongest message yet that the central bank is preparing to soon restart interest rate cuts. He's highlighting the labor market's vulnerabilities even as inflation increases. Now, he held back from explicitly endorsing a reduction in borrowing cost at the Fed's next meeting in September, but his emphasis on the prospects of a weakening economic backdrop made clear that a cut is likely next month. So call your realtor.
Exactly. That's why you need us. That's why working with the local realtor is so important. Um, and we work with both buyers and sellers to navigate these negotiations and pricing strategies. And we have mortgage partners that also do a great job of helping you do that.
We have a whole team, and we want to work with you as a team. So don't forget to subscribe and like, and give us a call.
And
We're
watch
here,
next month's video because hopefully we'll have more news.
right? Or somewhere in between. See you the next time. Bye bye.